Hello traders, you are welcome back to the Forex Geek channel. In this video, we are going to be talking about one of the most effective ways to predict market reversals using the fair value bands indicator. So let's just add the fair value bands indicator to the chart right away. Okay, here we go. So if you've ever struggled with timing your entries or knowing when a trend is about to turn around, this strategy will help you spot reversals with a level of accuracy. Now, market reversals are some of the best opportunities for traders, right? Catching a turning point at the right time. When you catch a turning point at the right time, it allows traders to enter at the best possible price, avoiding unnecessary risk. Are you entering too early? You risk price continuing in the same direction. Or are you entering too late? You miss the best part of the move. The fair value bands indicator helps traders avoid both of these mistakes by showing exactly when a price is overextended and ready to reverse. Okay? So now, how does the fair value bands indicator work? The fair value bands indicator creates a dynamic range around price action. You can see the dynamic range around price action, right? So it highlights overbought levels. You know, when price moves above towards the upper band, when price moves above towards the upper bands, you know, it indicates a potential reversal to the downside, right? And then for the oversold zones, when price moves below towards the lower band, it signals a possible reversal upwards. Okay. Now, concerning the fair value zones, the middle area where price is considered balanced, you know, it helps traders determine whether the market is overextended or stable. Okay. So when the price touches or exceeds these bands, when the price touches or exceeds these bands, right? You can see what happened around here. When price touches or exceeds the bands, it means that the market is likely overstretched, making it a great time to look for reversal setup. So imagine if you had entered a sell after price got overstretched around here, whether you entered here or you entered here, so long as you had set your stop loss appropriately. Of course, your stop loss should have been a distance because you are looking for a reversal. Remember that reversals might not happen immediately you expect. Okay, so if you are entering here or entering here, you are taking a higher risk. Okay, because normally I would have recommended that you wait for a breakout from the bullish trend line first. So if you are entering a reversal around here, a reversal trade, a sell trade around here, you shouldn't set a tight stop loss. It's too risky. Even if you're entering here, you shouldn't set a tight stop loss. It's too risky. Unless if you wait for a breakout. Once that breakout has happened, then you can enter your sell and set your stop loss above that swing high. So this is the preferable way to do it, okay? This is the preferable way to do it. And your take profit can be, you know, around support zone, okay? Now, when you want to use this indicator to trade reversals, you should be looking for price touching the bands or breaking the bands. If price moves outside the bands, it may indicate a temporary extreme move, all right? But if it just stays within the bands and gets rejected, then it could be that you know, a reversal is likely coming up. So you should be looking for confirmations, looking for break of structure, change of character. You know, watch out for your market structure, all right, and price action analysis. Look out for candlestick patterns that validate the reversal, okay? And then you can actually confirm with momentum indicators. You can decide to use tools like RSI, you know, or MACD or volume analysis, you know, just to help confirm if price is truly ready to reverse. Like you can see what happened here. The RSI was already in overbought territory. So this also confirmed this move, right? It confirmed the move. So right after you had a confirmation of a breakout, it would have been a great place to enter a sell, as the RSI already dropped below the overbought territory, showing that the sell had started. Okay. Now, you can also decide to wait for price to re-enter the bands. That's a strong sign that the market is correcting back toward fair value, often a high probability trade setup. Okay, so that's a different scenario though. It's a different scenario. All right. Meanwhile, ensure that you always observe good risk to reward ratios, even when using the fair value bands indicator. Remember that there is no indicator out there that guarantees profit. There is no indicator out there that is foolproof. Okay, so that is the reason why you must always observe good risk management, because you might not be right all the time. Okay, so the times that you are not right, you should make sure that your losses are minimal. And the times that you are right, you should make sure that your gains are maximal. Okay, just another example. All right. You can see that here, the price dropped into the oversold territory. And then at that point, we should be looking for buy opportunities. We should be looking for bullish candlestick patterns, any signal to validate that reversal. So if you enter a buy after getting confirmation, you can set your stop loss below the swing low, and you can target the resistance for your take profit. Okay, so this was quite a clean opportunity, right? Meanwhile, at this point, we had a ranging market. You can see we had a ranging market at this point. So this would have been, it would have been better to just stay clear, right? To stay off the market because of this ranging condition. Okay. All right. So now we can see that there was another opportunity here. You can see in this particular scenario, price pierced out of the overbought. Can you see that the momentum was quite strong and price pierced out of the overbought territory? So in this case, just know that the bullish momentum was really strong. So I won't recommend jumping into sell immediately, because it shows that the bullish momentum was really strong for it to pierce out of the upper bands. So what you should do instead is to wait for the momentum to calm down. Once the bullish momentum calms down, for example, seen by this double top. Remember that double top is a chart pattern that signifies a potential reversal, bearish reversal. So as this double top formed, that would have been a good place to now enter your sell after this evening star formed. You can see this evening star pattern. You can see after this bearish pattern forms, would have been a good place to enter a sell, set your stop loss above the swing high, and you can target resistance for your take profit. All right. Meanwhile, you ensure that your take profit level is at a valid zone. Okay. So the fair value band indicator is an essential tool for traders who want to predict market reversals with accuracy. By understanding overbought and oversold conditions, traders can improve their entry timing and avoid unnecessary risks. If you found this strategy useful, hit that like button, subscribe to the channel, and turn on notifications for more pro-level trading strategies. That is it for this video, guys. I hope to see you in the next video. Happy trading.